All right, David, hit me. What the fuck is happening right now? Okay, the market is going fucking crazy. Okay, and not even just going crazy. It's not even like the stock market. It's everybody. Okay, everybody right now has access to the stock market via the internet, via apps. You eliminated the brokers or the middlemen.
Yeah.
The physical middleman, and you became this savvy person on the brokers online. All right, so average Joe can get stocks and exchange them and doing all this stuff. So that brings us to the question: what the fuck is happening right now con Robinhood and con todo GameStop y con todo lo que está pasando? Because there's a lot of shit there.
Yeah, there is. Okay, so I think for starters, everyone having access to Robinhood, different trading platforms, it's a really good thing.
It is.
Because if you look at some of the old platforms,
Mm-hmm.
it's very difficult for someone who doesn't understand how to invest or how to trade stocks. It's very difficult for them to go out, find a broker, and decide to start investing money.
Okay.
It becomes restrictive, so you almost don't even want to do it.
Right, because I wouldn't have known how to do it.
Yeah.
Or who to go to, or trust that these people like have my best interest, or no sé ni qué hacer.
Yeah,
Right.
exactly. So so for a long time, the amount of Americans that own stocks, it's been going down.
Okay.
So with something like, Robinhood really pioneered it. Now you have a lot of these other brokerage firms that aren't charging for trades.
Right.
So now it's really starting to explode.
And it's all digital and it's all available to your fingertips, right?
Exactly.
Right.
Yeah. So what Robinhood is doing, it's a really good thing for
Okay.
everybody, because at least now people are getting engaged and everyone's having this conversation. I mean, we're even having this conversation right now.
Yeah, everybody in their minds. Okay.
So it's a really good thing,
Right.
because you see people that are third, fourth, fifth generation, and this is why they're able to stay that way.
Wealthy.
And then wealthy.
Oh,
yeah.
okay.
And you see people that aren't, and it's because they're never able to even start.
Wow. Okay.
And that's the problem, right?
Right,
You'll go
right.
through 3 or 4 generations where you haven't even started.
Right.
But if that first generation started, that fifth one would be doing, okay.
Very well. Yeah.
Not even having to do that well, they would be doing very well.
Okay.
Really?
So to a certain degree, we have a access to the masses that is very good for the
Yes.
masses, because now we have an opportunity to see without these restricting firms.
Yeah, exactly.
Let us stop. Okay, so then
that was a really good thing.
right.
But the problem, and what you're seeing now, is that the average investor has no idea what they're doing.
Okay.
They don't understand what the stock market actually is. And that is a very dangerous thing.
Okay.
So that's kind of why you're getting into a lot of this hype and different mania going on.
Okay.
So what I like to start with, when I talk to people about investing, one of the first things that I explain to people, and it's so surprising that people don't actually know this, because it's just one of the most basic fundamental things you can understand. A lot of people will, if they're investing, they'll know the price of their stock.
Right.
So if you have Apple and it's trading at 130 or 140, you know that it's trading at that. Tesla, it's trading at 800, right? So you know
because you're watching like the numbers. Yeah.
Yeah. So people know the stock price, but what the vast majority of people don't know, they don't even know what the word is. It's the company's market cap.
Okay. Yeah. What is that?
So yeah. See, so a lot of people will buy into a stock, and then so anytime anyone asks me or anyone tells me about a new stock and they're like, hey, I really like this, they're doing this and this,
right?
I think you should buy it. The first question I ask them, and I do it just because I like to see if they know
what they're talking
because
about.
if you know what it is, you should immediately know.
Okay.
Right? You shouldn't be buying something without knowing what the market cap is.
Oh shit.
So whenever anyone tells me that, I'll ask them, what's the market cap? And 9.5 out of 10 times, oh, I don't know. What is that?
Right.
And in my head, I'm like, you're investing and you don't even know what a market cap is.
Right.
It's very concerning.
Yeah.
So to backtrack, all the market cap is, it's really what the actual value of the company is.
Okay.
So if you sell your house for $400,000, you know that the value of your house is $400,000.
So you want the amount of the company's worth,
Yeah.
total worth of the company.
Yes.
Okay.
Because that's the price you're buying into for the house.
All right. Okay.
So the reason why it's important is especially with some of these companies, their market cap is so high that there's no way to justify the price.
Oh.
And the only reason why these companies are so high is because more and more people keep buying into it. And
Okay,
so that's
so
going
they're-
back to the dangers of Robinhood.
So can they explode at some point because they're overpriced or over? There's a term for that? I'm assuming.
Yeah, well, so what ends up happening is if you look back at, let's say, the .com bursting,
Yeah.
it's the same thing. You have all these companies where their valuations just aren't justified.
Dang.
And there's
Okay.
something called, I believe it's the greater fool, which means you're buying something just because you think someone else will buy it for a higher price.
Oh fuck.
And
Yeah.
that is the only thing. So when you see GameStop,
Yes.
that's exactly what happened. People are buying it at $200 a share because they think they could sell it for $250 or
Right.
$300, and then people are buying it for $300 because they think they can sell it for $500,
Yeah.
and that's all they're trying to do.
Right. Trying to make a quick dollar and be done with it. Like.
Yeah.
Okay. So what's happening? Okay, because with this whole situation that happened with Robinhood and all these restrictions that they don't let you buy and then they do let you buy, and it's like, why does the broker have the ability to block people from purchasing and selling? Because that's what I didn't understand. Like, how the hell, if it's a free market, do these companies have the ability to still not allow you to sell your $300 at GameStop?
So what Robinhood did, they allowed people to sell, they just didn't allow people to buy.
Oh,
So that was the difference. Yeah, so if you owned it
okay.
and it was valued at, it was trading at 350,
Mhm.
you could still sell it at 350.
Mm.
But what it was restricting was other Robinhood users that would have bought it at 370. So they got restricted. So people
Okay.
couldn't buy. And because the stock's price is based on supply and demand, if you take away the demand, the price is going to drop.
Yeah.
So GameStop, I believe it was in a 60-minute period, it dropped 70%.
Yeah.
So
It was, I mean, it was a messy situation, and I think it was a messy situation because most of us don't know how this shit works.
yeah,
So, there's a lot of outcry because, oh, why are they doing that to us, quote unquote. I didn't have GameStop. I'm just, saying.
Mhm.
And then at the same time, it's like, wait, Robinhood is supposed to be for the people, and you're restricting the people and allowing like these rich corporations to cry foul, So I didn't understand why they did it exactly, but at the same time, I understood one thing. You allow the masses to call the shots, okay? So you can't not expect this kind of thing to happen. Now it's accessible, where before, like you had said earlier, it's for, the wealthier, knowledgeable person that knows how to play the game, and now it's like every Joe, with a fucking iPhone can fuck around with it, even if it's just one stock or two stocks. Still, that it translates into, I don't know how many millions in America have it now, but before there wasn't these Joes fucking around with it. Now, even if you buy one, but there's 300 million buying that one,
right.
that's a game changer right there.
Yeah. Well, so, okay, to answer your first question, Robinhood shouldn't have done what they did.
Okay.
And they know they messed up.
Oh, okay.
And the SEC is actually looking into it.
Oh, wow.
So this is really just the beginning of who knows what.
Fuck.
I mean, it might end up causing Robinhood to shut shit down.
Completely.
Right? That's on the table. So
Yeah.
they really shouldn't have done that.
Okay.
What they're claiming is that basically they were too exposed. Their clients were too exposed in GameStop. So what it could have done was, especially if it crashed, and you're left with all these people that are losing a lot of money,
Right.
and they borrowed on it, they might not be able to cover in time.
Oh,
so
that's
then,
right.
yeah. So Robinhood was really concerned about that.
Mm.
They ended up raising, I believe it was $1.5 billion, just to kind of beef up their bank reserve, their own
Got it.
cash reserve.
Okay.
Because if you're borrowing on margin, you're borrowing from Robinhood.
Yeah. They have an application or a process that you can borrow from them, before you could actually, put your money in, you can borrow from them.
Yeah.
And then that's true. That's not your money.
And yeah, exactly. And then
Okay.
and then that's another problem. So a lot of people don't actually understand how margin really works.
Ah,
So then they're borrowing, so let's say you invest $1,000,
right.
they're borrowing another 1,000, so they're investing two, but they really don't understand even the basic fundamentals of how margin works.
Mm-hmm.
Because what ends up happening is you could make money twice as fast, but you could also lose money twice as fast.
Right.
So then when people end up selling out of positions, if it's showing that they're down, that their stock price is down only 400, but when they sell out of it, they're actually down a lot more because you have to pay back
The
full
initial
loan,
yeah.
and then you're just left with whatever's left over.
Fuck.
So your losses are actually double. So
Right.
a lot of people don't even know that that's happening
It's
when they borrow on margin.
wow, it's like gambling. It's basically, you know,
In a form, yes.
on borrowed money.
And
Mhm.
I think that's the problem. Going back to people not even understanding what the market cap is.
Okay.
Investing gets a very bad name because people think that it's a form of gambling.
All right.
But when you invest properly, it's not gambling.
So, okay. Okay, so is it the masses, you know, at fault because you have these you know, easy access okay, there's an app for fucking everything, right? So
Right.
it was eventually going to happen. The Robin Hoods and the Boohoo, I don't know,
Weeble.
Weeble
Mhm.
of the world were eventually going to hit
Right.
everybody and their moms, okay? It hit this week because it was a messy situation where somebody influencers, let's just call them what they are, people from Reddit or for whatever chat group or whatever, they influence the masses to do something, which is very fucking interesting.
It
you know,
is.
now that we're talking about this, they influence a stock and people make money. You know, the game has changed because if you think about now, like let's just say, I don't know who's your like one of your freaking people that you follow on Instagram or whatever.
I don't have social media.
Yeah. Well, okay, then see, you're making money and that's why you don't care about social media. But if you had like J-Lo, you know who that is, right? So
Mhm.
J-Lo says tomorrow, fucking Gucci is the shit, you know, immediately. Or Elon Musk.
Yeah,
Motherfucker.
he moves the market.
Yeah, he moves the goddamn market.
Yeah.
And it's stupid to say, but are we in that goddamn game now for stocks that we weren't before? Because Warren Buffett for many fucking years had said, but invest. Nobody fucking listened to him because he wasn't on Instagram. Elon Musk says 3 things like, oh, this chat application, go get this, and it blows up. So are we in that already? Like, are the masses being moved by influencers now?
So, I mean, without a doubt, because that's exactly what happened with GameStop.
Mm-hmm.
And like you mentioned, Elon mentions a company. He mentioned Bitcoin again, and then it shot up like 15% just because he sent out something. A tweet, right? Correct. So we're influenced with it, which really adds to the danger of what's going on.
Okay.
Because going back to people not even understanding what a market cap is, which is such an easy thing. It's not complicated, right?
Mm-hmm.
It's literally just, okay, this is what the company's valued at.
Right.
Tesla was valued at 40 billion, then 100, then 200, now it's at 800 billion.
Okay.
That's the market cap. That's all it is. It's not this big complicated thing.
All right.
But you need to understand that that's what it is, because you wouldn't buy a house you wouldn't buy part of a house for $10 million if you knew that the house was only worth 400,000.
Right.
You wouldn't overpay.
Yeah. Okay. Exactly.
But the problem is because instead you have a stock price and people don't understand how it correlates. All they see is a stock price.
Right.
All they see.
Okay. Perfect example. I'm gonna give you a Dogecoin. You know, fucking Dogecoin was like all off those charts the other day. That motherfucker was 1 cent. Okay.
Yeah.
Right. So that's what I think it's worth. Right. 1 cent. But you're saying you got to look at the company and what it's worth. Like if it's really worth the $1 million that it posts, right? Let's just say that. And I'm buying it at 1 cent. If I'm buying and selling, you know, selling high and buying low, like I'm making money. To me, it's making money. How is that dangerous to me? You know,
It is. So that's the thing. With what people are doing, let's say the Reddit users, people that are really just doing momentum trading and trying to buy and sell.
That's a good, yeah.
They're buying into something at 20 because they see it's working its way up to 25.
Yes.
So then they'll sell it at 25. So you could make money, but the problem becomes going back to what we were discussing about generational wealth. It's very, very difficult to create generational wealth doing that, because what ends up happening is these individuals, the vast majority of them, they see investing as gambling.
Okay.
So you'll go to the casino and you'll gamble $500.
I see.
You might spend $500 on Robinhood.
Yep.
And then when you're buying and selling, in your head you think, well, this is, gambling money anyways.
Right.
So it's not a big deal.
Correct.
But it is a big deal because the problem is now you've taken the entire umbrella of investing and in your head, you're associating investing with gambling.
Right.
And that's not what investing is. But what it ends up causing is who's going to take something like gambling seriously?
Yeah, they won't.
You're not going to save up $50,000 and live in an apartment when you could be living in a 5-bedroom, 3-bath home with 2 new cars. You're going to take that life over, let's say, living in an apartment or living in a modest home and saving up that $50,000 so you could aggressively invest
and make to 100,000 and make it, $1 million and
exactly.
Okay.
But the problem becomes people don't look at investing in that way. They look at it as basically gambling money, and then who wants to trade that off for gambling? When if you, let's say, make those 50,000 or you save them and then you throw it at a company like GameStop when it drops 70%, and then you lost 70% of your money.
Right.
So that 50,000, you just lost 70%. You just lost $35,000 in 60 minutes.
Damn it.
So in that scenario, why even bother?
Right.
Instead, people will take the nice house and they'll take the nice cars.
Right.
And they're maybe even saving 5% in a 401k, but that's about it.
Yeah, standard living or living outside of the market, spending their money away from it because, so
that's the real danger that no one actually talks about is we have an entire generation growing up where you're really associating investing with gambling. And that's not what investing should be if you do it right.
So if the majority of us are fucking around playing with the market, obviously, and there's a lot of us playing with that market, pretending it's a fun little game of whatever, could we fuck around real companies? Can we mess with their, because let's just say, and I don't know the names of them right now, but let's just say REI, I don't know, a sporting company, right? Somebody says, go out camping and buy everything, and then REI just blows up, right? And we all buy into it, and we all get the fuck out, sell high like we want to, and then it has no more money again. Doing that to a company, does that create issues for them or?
So not necessarily, because once a company does an IPO, it already raised its funds. So that's kind of it. The stock price benefits the shareholders, so whoever owns the company, and usually the investors that own the company, they're the ones that can fire and hire CEOs and executives. So executives want to keep the shareholders happy by being profitable.
I see.
But it doesn't exactly affect the company per se. If it goes, let's say a stock goes from $200 down to 100, it doesn't affect it too much. But what it does do, when it does affect it, will be a company like, let's say, Tesla. When they're trying to get started, when they were trying to get started,
I see.
If no one really believes in the company, or if they price it up and then sell it, well, you're taking away that company's ability to raise more money. And you need to raise money in order to grow. Yeah, not always, but usually you do.
So the startups are the ones that are probably the hardest to stay afloat and continue growing. Like a big one established, like a Walmart's, the Apples, the ones like the Amazons of the world. That just fucks around with the stockholders, in the trading world. But the company as is doesn't get affected. The major ones don't. Anyways.
Yeah, they really don't.
Okay.
So you're not. You could affect the people that own the stock.
The stock.
You could affect the hedge fund companies, and that's what happened with GameStop.
Right.
And that's why the markets on Thursday and Friday were lower. So what ends up happening is, you have companies, hedge fund companies, that they're having to sell out of other positions just to cover
their losses.
All right. So now they're selling out of Tesla and Apple and Google because those are safe companies. They're not going to move around too much.
Right.
So if they need to shore up their bank accounts, they're selling those companies.
Oh, yeah.
And that's why you saw on Thursday and Friday that everything dropped. Right. So that's part of it. I mean, that's not everything. There's also COVID. There's different variants.
Yeah, there's right now.
And different things. But that definitely plays a role also.
So, how do we go about this situation in terms of how do we play it safe, but also how do we make money? Because we want to get to that point of like you said, the generational wealth that, that we want to keep giving the next generation, my kids, their kids, and stuff like that. But reality is You know, most of us can't afford to drop in $100,000 to the stock market. You know,
Right.
$50,000. And so when we see something like Robinhood, we think, fuck it, ¿sabes qué? $10. Here we go. Here I go. You get like, you know, 10 of these little fucking things, whatever the fuck they are, and make them $20. You know, that's the mentality that the average person playing in these apps probably has. And maybe it's not that they're not taking it serious; it's that they don't have enough money to invest serious, you know, I guess, in that sense. So how do we make money, but at the same time, you know, plan for a bigger future in investment?
Yeah. So that's why I focused on what I mentioned earlier, how people perceive investing and the stock market as gambling.
Right.
So the first thing, I think it needs to start with people not looking at it that way.
Okay.
Right. So because people only invest money where they're kind of like, well, I'm okay to lose it.
Yeah.
And if I'll just do the 500, right? Now, if you were saving up, let's say for a down payment and you needed that money in 3 months, you know, maybe it's not the best to put it in the market, but but the goal really is to even if you start slow, you want to build up a position. And I know I'm going back to it, but it really starts with that, is investing isn't gambling.
Okay.
If you're doing it properly. And so there's a few ways. And if you listen to guys like Warren Buffett, especially with YouTube now, it's very easy to really just get consumed and try to find better ways to invest and try to learn different things such as the market cap. Okay. Right? People will spend 2, 3, 4 hours every single day on social media.
Instagram and
on
Facebook.
Instagram, Facebook,
100%.
Snapchat, Twitter, all of that. I don't have any social media, but I read 5-6 hours every single day.
Okay.
And people think that that's crazy, but the average person is scrolling for about 4 hours.
Yeah, no,
so
100%.
I'm just shifting my attention from that into something a little bit more productive.
Right.
And so going back to your question, once you get past the idea that you're only putting money into Robinhood, that you really don't care if you win or lose because it's kind of like gambling if you put it on blackjack. Once you get away from that, then you'll actually start taking it more seriously. Okay. So then you'll stop just putting $10, right? You'll slowly find a way to increase that exposure because now you're not looking at it as money that you may or may lose.
No.
Now you're looking at it as money that will grow with time. Okay. So I think that it's important to really just reiterate that, because that is the biggest problem.
So if we go and we take it as something like you said, like money that will grow, what is, let's just say the 5 things. Okay. Look at the company's market cap, correct? You said. Okay. Hold your position for what length? I mean, obviously, if I bought it $1 and it's $13 and I have 100,000 of them, that's $1.3 million, right? It's easy to just be like, I'm going to sell because I'm going to sell, right?
Yeah.
How do you hold your position for long term and not just bail out when you feel like you just made it? You know what I mean? How do you? Because you think that 1.3, now that I got it $1, and like we talked about, that's a high number. Why not at sell? You know, in the first 3 months when that hit up to that point, why hold your position? What mental state, you know, keeps you without selling or rushing into making a profit $1 quick?
So the S&P on average returns about 10% a year.
Okay.
On average. And you have 85% of all hedge funds that underperform the S&P. So if you were to just put money in the S&P 500 and not touch it,
right,
you're already doing better than 85% of all investors.
Oh, okay.
And that's just on any given year.
So explain what's S&P for real quick.
So the S&P 500, it's an index of 500 of the largest U.S. companies.
Right.
So basically, you could just buy into all 500 companies.
Correct.
So you're not at once. So yeah, so you have exposure to the basically the United States economy overall.
Yep.
And on average, the economy will continue to do better. Maybe not every single year, but you would assume that in 10 years, our economy will be stronger and bigger than it is today.
Correct.
And in 50 years, our economy will be bigger and stronger than it is today.
Well, easy. As we're sitting here, the economy, you know, has taken a crazy ass turn, with the exit of Trump and the coronavirus and all this shit that's been happening, you know, in the United States, have halted, you know, working people, you know, from work. So easily, the economy's not doing so well, meaning that in a couple of years, hopefully things look better. That alone right there tells you that we're going to be in a better position from where we are today to a few years from now. Easy.
Exactly.
Mm-hmm.
So when you look at it from that perspective, now you could start to feel more confident to actually put more and more money into the stock market.
Okay.
Because now you don't have the mentality of, well, maybe I double it, but maybe I lose it all.
Right. No.
If you look at it from that perspective,
long term,
the risk of losing it all is, you know, especially let's say you do something like the S&P 500 where you're just putting money on the overall market.
right.
If you were to lose all your money, it would be because the economy completely collapsed. And if our economy completely collapsed, so did the rest of the world.
Yep.
So at that point, your portfolio is the least of the least of your concerns, right?
Yeah, exactly. Okay.
So if you're investing with the long-term horizon, what it does is it becomes a lot easier for you to really start putting more money into it. Okay. So that's first and foremost. There's a couple ways to accelerate your return, which is probably what most people, really want to know about.
Yep.
They don't want to wait 7 years for their money to double.
Right.
They want it to double in 2 months or 3 months or 1 year.
That's why they're playing.
And that's why they're doing it. Yeah. And that's okay. And I'll get to that in a minute,
mm-hmm.
because there are several things that you could really do yourself to just look into.
Okay.
But going back to holding long term, the reason why it makes sense to hold long term. So one, if you sell any stock before 12 months, you're going to have to pay taxes on it.
Mm-hmm.
And so let's say you're in California, you'll have to pay your federal taxes and you'll have to pay your state taxes.
Oh, shit.
So let's say you sold and made a $50,000 profit because you flipped a company really fast. Well, you might end up having to pay about $20,000 in taxes. So you basically just lost 40% of what you made selling that stock.
Oh, wow. Okay.
If you hold it for longer than a year, it gets capped out at capital gains. So after 1 year, it's long-term capital gains. So now you're not paying the same tax bracket.
Oh, wow.
And what ends up happening is depending on how much your annual income is, you might actually be able to sell your stock after 1 year and not have to pay anything in taxes.
Okay.
Or you might just pay 10% or 15%.
Based on your salary.
Based on your salary, okay. Which is a whole lot better than paying that 35% federal tax.
And this is even if I say I sell a stock and then immediately buy another one with that.
Yes.
It's still,
because selling it creates the taxable transaction.
Holy fuck.
So, yeah, so basically every time you sell, depending on your individual tax situation, you might be losing up to 40% of that sell.
Jesus Christ.
Where if you buy a company, let's say you buy a company like Tesla, and you're like, hey, I like this company for the next 5 years.
Right.
Well, there's really no point to sell next month. You're better off just holding it, because even if you sell after 1 year, you're at least avoiding a large chunk of your tax liability.
Damn.
So that's kind of half the game already.
Okay.
Because now, I mean, if you're losing 40%, someone can make half as much money as you, and if they waited a year, they're making as much as you did.
Yeah.
Effort, with half the effort and half the work.
Okay. Yep.
So that really changes it. The other reason why you want to hold long term is, let's say you bought a company at $1, and now it's trading at $13.
Mm-hmm.
You've made a 1,300% return. So
Mm-hmm.
if you invested $1,000, now you're at 13,000.
Right.
Well, but what ends up happening is, after a while, so let's say that stock goes from 13 to just $14.
Mm-hmm.
That's only, let's say, like a 4% increase in the stock price. But that dollar from 13 to 14, that's 100% return on your original $1 investment.
Exactly. Yeah.
So if you look at it that way, you're basically getting 100% return faster.
Holy fuck.
And the average hedge fund underperforms the S&P 500. And that average return is only 10%. But if you hold long term, that's how you're able to now the money that you invested,
That's true.
you're starting to make 100% return on a regular basis. And let's say you don't sell that stock and now you've owned it for 5 years and that stock is trading, let's say, at $60. It might go from $60 to $70 in one day.
Yeah.
And those $10, because each dollar from your original buy-in is 100% return, on a day when it goes from 60 to 70, you just made 1,000% return on your original investment.
Fuck, yeah. Yeah, yeah. It just
So
keeps on accumulating.
Exactly. So when you look at it from that perspective, and then you factor in the tax benefits, and then of holding,
yeah.
it'll change your perspective on investing and on not selling.
Damn.
Because it's a lot easier to buy into a company, especially when they're getting started. It's a lot easier to buy into a young company and then just grow with it. Because going back to the market cap, and this is why the market cap is so important, if you buy a company that's valued, so NEO is a great example.
Yeah, a great example.
We started buying NEO at $1.50 a share.
Wow,
When it was at $1.50,
Yep.
it was trading at about $1.5 billion. That was the market cap, the value of the company.
Right.
Well, today, that market cap is about $100 billion. So it went from 1.5 billion to 100 billion.
Yeah.
But what ends up happening is when you buy a stock, you buy a part of that company.
Yeah.
So you own that company. You bought and owned that percentage of that company when it was valued at 1.5 billion. So as it grew to 100 billion, so did your money.
Yeah, and
because
so
your position increased.
Yep.
Exactly. So when it comes to actually trying to make more money, you're much better off finding good high growth companies, taking a position and holding, instead of trying to flip in and out of companies every time you get a 10 or 20% return.
Right.
Because if you do it this way, you could see a 200% return, 3, 4, 5, 600% return.
Right.
And especially with some of these high growth companies, that's starting to become the norm. But the problem is only a select few are actually holding and letting their value grow up that way, because most people are just selling too quickly.
I was going to say, so okay, the problem here is the fact that we talked about at the very beginning. We don't know shit, you know, these generational gaps between wealthy people and, you know, lower class people in talking about money wise. We're not educated that way. Okay. Right. So none of us are. So you read and you skip the whole social media situation, but you're one in very few people that do that, because the social media situation has us all addicted, right? Like junk food, you know? So, okay. What can average people do? Because we can't all do what you do, because not all of us like to read or research or stuff like that. But at the same time, if we're going to play in this field, what's the easiest thing to get us started for the lazy guy? Remember, because, you know, we got to go somewhere to start.
Okay, so what I tell people is, so we just got out of 2020. We're in 2021. Correct. And particularly last year, with it being 2020, it really reminded me of the 1920s. Okay, so the 1920s, you had the Great Gatsby, you had the Roaring 20s, and the reason I always make that connection is in 1920, during that decade, you had people getting off of horses and starting to drive cars. Yeah. And I guarantee you that society, they felt like it was the pinnacle of society. Like, we have cars now, we don't have to depend on horses. Like, this is living, this is life.
It changes everything.
Yeah, like we're on top of the world. This is like, and they probably thought this is as good as it gets.
Right.
I feel that our society feels that same way. So with it being 2020, we can FaceTime now. We have our Apple Watch, right? So we have Wi-Fi pretty much almost anywhere we're at. Right. Our cameras take amazing photos on our phone. We don't need to have a digital camera extra. Right. Our cars look really sleek. So I feel that people feel the same way right now. Okay. And the way that I look around when I see where we're at today is I think of the difference between 1920
Right.
and 2020
Mm-hmm.
and how much of a difference has happened in those last years.
Correct.
And I think that we're about to start another not the industrial revolution, but another one.
Yeah, another like some sort of digital revolution or
Yeah.
technological revolution of
Yeah.
some sorts. Yeah.
And there's several different things that are coming to play. So you have autonomous driving.
Oh yeah.
So that
Uh-huh.
is going to present a lot of opportunities. The transition from renewable energies
Right.
off of gas, that will present a lot of opportunities.
Yes.
You have gene editing. So CRISPR,
AI, artificial intelligence.
artificial intelligence
Yep.
is another big one. You have quantum computing that's starting to come out.
Yeah, that's some scary shit right there.
There is,
Yep.
but my point is all of those are very disruptive technologies.
Correct.
And right now they're still in their early stages.
Very early stages.
Very early stages.
Yep. That's
So
true.
it's the equivalent of looking at what Steve Jobs was doing. So when Steve Jobs was working on the Apple computer, the first couple of them, he was already thinking about the iPhone and being able to eventually have a touch screen.
Right.
And when he unveiled the iPod and then the iPhone and then ultimately he unveiled the iPad, he had already been envisioning that for 20 years.
Right.
Because he knew that it was coming. 20 years out, he knew it was coming, because then it just becomes a matter of time for the technology to catch up.
Correct.
So going back to a company like Tesla, we started buying when it was $40 a share.
Holy fuck.
Now it's at $8.80, but we started buying then. And I will tell my friends basically the same thing that I'm saying now, which is in a few years, he will figure out autonomy. He will be able to start transitioning to EV cars.
Mm-hmm.
He will work out the batteries. And I don't imagine us in 50 years driving gasoline vehicles.
Right.
We will be driving electric vehicles. And then the electric thing, even just from an economical standpoint, it makes sense.
Mm-hmm.
I drive a 2500 and I'll spend $600-$700 a month just on fuel.
Yeah.
If I get a Tesla truck, that's an $800 expense I don't have. And I don't even drive that much relative to, let's say, taxi drivers, moving companies.
Yep.
So it just becomes an economical benefit. So that transition will accelerate anyways. So the trick is to get in front of that acceleration.
Right.
And all those different things that I talked about, that's all coming. And there's companies right now that are working on that future.
So there is. So, but how do we get access to that? Because, like, if I think about where we are, like I have to go researching, for me, again, my field, cameras, right? And looking at like technology and looking at Photoshops and looking at, in my area, like what's going to make me a faster, better person, employer or employee of my industry, right? But if it's not in my industry, I don't see it, in that sense. So I can tell you, Canon lenses, Canon this, Canon that, or this kind of a camera that does this, or, for the futuristic shit that I need. But for someone that needs to invest that doesn't know anything about electric cars, or that doesn't know anything about the AIs of the world, because there's so many little companies that are performing very well, doing their little tests, if you will, or market exposing themselves to bigger and bigger bidders to get the funding that they need. But I don't know who they are, so how do we come up to finding them so that we can invest in them? Or where is it listed? Or how do you make your research? Is it like a journal? Where do you find your stuff?
So what I found to be the easiest thing, Apple has an app and it's called Apple News. And it's on everyone's phone.
Yep.
No one uses it. Most people actually just delete it.
Yeah, I have deleted it too.
Yeah, but with Apple News, if you pay a $10 subscription, and that's all it is, $10. Netflix is $20.
Yeah.
If you
now it's 20, yeah.
If you pay the $10 subscription for Apple News, it gives you access to a lot of publications that would normally charge you individually.
Oh shit.
So one of my favorite ones that makes the $10 worth it is the Wall Street Journal.
Okay.
So the Wall Street Journal will be included in that. And so the nice thing with the Apple News is it's different stories. It'll have the headlines. So it has a feed kind of the way your Instagram does.
Right.
But the difference is, instead of scrolling through the feed, looking at, you know, photos and memes and what have you,
Yeah.
you're looking at different headlines. So what I have found to be really, what's worked really well for the friends that have started to do this is there really isn't a shortcut. Right.
Yeah,
So
of
you
course.
kind of have to start with that.
Okay. Yeah.
Right. So
That's good.
You
That's
see,
good.
yeah, you see guys like Michael Jordan or Kobe. And it's like,
Right.
man, how'd they get that good?
Oh,
Well, they were obsessed with it.
Yeah.
And they
yeah.
practiced more than anyone else.
Okay. Yes, you're
So-
right. That's true.
So when I started this with my friends, and the biggest thing is I would push on them, you really have to read more.
Okay.
There's just no getting around it.
Okay.
You have to read more, because if you're not even reading, 10, 15 minminutes a
But
day,
you're not reading like, okay, there's not a book that you go back and read, oh, how to the fuck to invest, you know? There's not a workflow chart that you go back to, like, you got to read this goddamn book to learn how this shit works. No, you're reading today's news and where we are today.
Yes,
Okay.
exactly.
Okay.
I'm reading, and so you could do that, right? There's a lot of great books on helping you understand the stock market better
Right.
and how things work. But I'm not really talking about that.
Okay.
What I'm talking about is, what I think we're talking about is knowing what companies to invest in.
Yes, exactly.
Right. It's like,
yeah.
how do you find the next Tesla?
Yes.
And
That
that's
was
what-
my question.
And that's what everyone brings up. How do you find the next Tesla?
Mm-hmm.
And the funny thing is, last year before Tesla took off, right, I was so confident in it that I sold one of my houses and doubled down just on Tesla,
Right.
because I knew it would do well. And I mean, I didn't think it would do this well, but I knew it would do well.
Right.
And my point is, for the people that are looking, there's ways to find those companies that are up and coming.
Okay.
But the problem is, if you're not even looking for them, how are you going to find it?
So it's
impossible.
right. So it goes back to, like, you are serious about this and you're going to do the serious research about the investments. So you're going to go find the companies that are out there in the news, trying to come up in the world.
Exactly.
Okay.
And by doing that, you might not come across a lot of companies, and you might read every day, and most days you won't find anything, but that's okay.
Okay.
Because when it comes to investing, you really only need to be right about a handful of companies.
Right.
So you might only come across 3 or 4 great buying opportunities in a year.
But that's all you really need.
That's all you really need.
I
Yeah.
see.
Because when you come across one and you do it right, you'll be confident enough, right? You let's say you found a company, you found it interesting, you start doing a little bit of reading, doing more research, and you think, hey, this company's doing really well.
Right.
They're trying to do this, and yeah, I think that this will be part of the future.
Correct.
So then okay, well, you can actually invest in it now at its current size. So when it ends up being,
okay.
50 times bigger, 100 times bigger, you'll have companies that are only selling, let's say, in California,
Mm-hmm.
and that they're working on opening distribution in New York. Well, if they're
That's
able to do
expansion.
that, that's
Yep.
expansion. Now they're doubling their size.
Wow.
Well, if they double their size, the company is going to double in size.
Right. And
That's just how it.
it makes
the revenue will double if they're making 50 million
right.
of revenue in California, and
You
that
go
they're
to New York.
and they're opening in New York, and their projections are to double.
There it is.
Well, now you found a company who's projected to double.
That's the word, projection. So you're looking for these companies that are projected to expand, that or projected to bring out a new product, or these companies are projecting to do something that you can see they're growing.
Exactly.
Okay.
And the more you read, the more you'll come across these companies.
Okay.
So then the trick becomes making sure you're buying it at a good time. And that's where the market cap comes in.
Okay, good question right there. Question is buying it at a good time. Let's just say it started at $1, right? Right now it's $7, whatever it is. Is it still good to continue to make these purchases on a $7 company? Because let's just say the startup was $1, now they're worth $7. And even if I see the projections, they're going to project to do very well, continue. But now I'm like, fuck, I didn't start at the beginning with these guys. I'm in the middle kind of thing, It might just settle at fucking 5 eventually. So how do you trust, or how do you know, when it's the right time? Even though, like you said, everybody grows a little bit at a time regardless. Like if I buy at 7 and they only move to 8, I really didn't do well, very well. versus when you got it and you figured it out at 1, you killed it all the way to 9. So sometimes I feel like I already missed my mark. I already missed my opportunity to make money.
So
how do you know?
So that gets a little bit more technical, just because that's why you really want to understand the market cap.
Mm-hmm.
So going back to my analogy with NEO.
Mm-hmm.
So right now NEO's trading at about $100 billion valuation.
Correct.
I wouldn't touch that with a 10-foot pole at this price.
Okay.
It might go from 100 billion to 150 billion.
Yeah.
So it still rallies another 50%.
It's
it might
huge.
go to 200 billion.
Yep.
But that company's not worth 100 billion. They've delivered a total of 17,000 cars.
Right.
So it's just ridiculous. The only reason the price is as high as it is because people that don't understand that it's not $100 billion company are buying into it.
Yeah, they bought into it.
And that's why they're, and then especially with, let's say with what Tesla did, now everyone thinks, okay, well, Tesla sold 180,000 cars. They sold 20,000 cars. So they should be 20% of their size. Tesla's 800 billion. So 20% of 800 billion is 160 billion.
Right. They're comparing.
It. And that's not how that's not how it works. Okay. Right. So it's knowing the market cap is what really allows you to know if you're buying it at the right time or not. Okay. And that's why it's so important to know, because buying NEO at $10 billion, $15 billion, that's still, you missed it at 1 billion, but it's still at 10. Yep. Well, that's okay. But buying a company like NEO at $100 billion, when it's only distributed 17,000 vehicles is ridiculous.
So it's in the research. It's in the research that, exactly. That you know what you're doing, how you're doing things.
Yeah. So now let's say Apple, for example. So Apple right now, it's pretty much at an all-time high. Its company value is $2.3 trillion, which is, crazy. I mean, it's like the world's largest company.
It's the best
company. So it's big. But even with that being said, they just started to sell phones in India. Mm-hmm. You have about 1 billion people in India, and they're transitioning into, especially with the renewable stuff, where it's a lot easier to get infrastructure with solar and different renewable energies than it is with building big coal factories. Yeah, yep. So you have all of India, one of the most populated countries, that still doesn't even have the iPhone in it. Damn. And Apple is working on penetrating that market.
Yeah, that market.
And that's going to continue to grow. So it goes back to the same thing, just looking at it from somewhat of an unbiased perspective. If you think, okay, well, Apple is this profitable selling to the United States, Europe, and China. Yeah. But now if you add 1 billion new users, what does that do to your revenue? And then keep in mind, most of Africa still isn't developed.
Correct.
So Africa will bypass the entire electricity, coal, all of that, and they're going to go straight to renewable energy, and they'll go straight into having Wi-Fi, cell phones, right? You have China, all these countries that are fighting for Africa right markets. Now because they're emerging markets. Yep. And my point is, maybe it doesn't happen in 5 years or 10 years, but can you imagine in going back to 1920, 2020? Right. Can you imagine 3020? And India not being developed in the next 100 years, it's not being developed.
Oh no,
it has to be, right?
Yeah, we're gonna get that.
We'll get there. Mm-hmm. And so the point is, a company like Apple, they do a lot of things right, right? So they might not grow 200-300%, but if they're continuing to grow at, let's say, that 20%, and then you see all these different things, then even buying Apple now as high as it is actually still cheap, because it might hit $5 trillion this year. They're not done. They're still really just getting started. Another thing with Apple. So I'm wearing the Apple Watch right now, and they just started to implement it's like an oxygen reader on the watch. Okay. Well, so what a lot of people haven't realized is Apple is starting with the oxygen thing in the watch. They're trying to penetrate the healthcare industry. And the healthcare industry accounts for 1/3 of our country's GDP. It's massive. The amount of money that people spend on healthcare. Yes. It's massive. And if you look at these big hospitals, the way the entire system is set up, it's antiquated.
Yeah.
right? We're doing things
Yeah.
pretty much the same way that we were, let's say, during World War II.
Yeah. We haven't upgraded a lot of the shit that how things are done.
Yeah, most of it still hasn't been upgraded. So think about the amount of revenue for the company that penetrates it and upgrades the entire healthcare industry.
Right, because we're still getting treated like, the doctor comes in, he fucking your chest, your back, your nose, your ears, but we have all this technology that could probably read how we feel, how we are, how we do things better and faster through a digital, something. I don't know what it is, but we're still ages away from getting accurate results, And I'm not saying doctors are not doing their thing. Doctors are doing their thing. I'm sure they're educated enough to understand ourselves, but
it's not efficient.
And not efficient, and it takes fucking forever.
Yeah, it's
one doctor efficient. Per 300 fucking patients, But a digital world of information could probably do an AI could probably do a lot better.
Yeah.
And we haven't still got there yet. Okay.
Exactly. So when you start to think about that, all of a sudden, Apple's actually still a cheap company.
Oh,
because
shit.
at $2 trillion, well, if they're able to capitalize on India, on Africa, if they're able to, develop a couple new products, and then if they're able to tap into the healthcare industry, Apple could be a $10 trillion company.
No, it could be the shit for the rest of the time, because think about what they've done to music. They've done to freaking phones. They've done to, now watches, obviously. Their technology with, no buttons on the phone revolutionized everything. Their technology can still continue to do that 1,000%. Okay.
And so one thing which reminds me with the no button on the screen. So everyone needs to so on YouTube, they need to look up Steve Ballmer laughing at the iPhone.
Okay.
So when Steve Jobs, back in 2006, when he first presented the iPhone, at the time, Steve Ballmer was CEO of Microsoft.
Right.
And at the time, Microsoft was a lot bigger than Apple was.
Right.
It was, the most powerful tech company in the world. Steve Ballmer was CEO. So he was arguably the most important person in the tech world industry.
Right.
So as far as, when you listen to analysts speak about a company, he should be an expert in that field, right? He's running Microsoft. He's CEO of Microsoft. He should be an expert in that field. When the iPhone came out, so if you Google that video, right. Steve Ballmer laughing at the iPhone, it's the short 2-3 minute clip, but he's literally laughing at the iPhone, and he's telling the guy interviewing him that that business people will not buy the iPhone because it doesn't have buttons. And he's telling them this, right? And I mean, we all see how that played out.
God, yeah.
And at the time, Microsoft was selling millions of phones. Well, they dropped the ball, and now they don't sell phones at all.
Yeah.
And Bill Gates is actually really upset about that, because he tells him that he kind of dropped the ball, because Microsoft should have done what Android did. Yeah. But they didn't. They didn't position themselves right.
Not at all.
And my point is that I feel that people grow up in a world where you think that because someone is supposed to be an expert about something, that what they say is actually the way it is, or the way it has to be, or the way the way it's always going to be.
Right. I know.
And that's not the case. So that's why I go back to, we're living in a world right now where there's so many things that are going to be coming out.
Okay.
Our healthcare is going to be completely different. The way we drive and buy cars, our energy, like there's just so many different things that will be different.
So when we talk about the stock market and what we're looking at as our future, that's it then. That's what we're supposed to look.
Yeah.
Look at what's projected to change or needs to change. And if a company is working on this solution for that, then invest in it when it's starting to grow itself. So like in marketing, the key is solving a problem. Okay. So they bring you a problem and they say,
well, in business too.
Oh, there you go. There it is. That's what it is. So solving a problem or solving a need, if you solve a need in business, I know that you make business. So in marketing, if you solve a problem, this fucking chingadera is not selling. How do we fucking solve that problem? So you go through marketing and you figure it out. So you're saying for the stock market, the serious stock market, we got to research. We got to figure out.
There's no way around it.
Yeah, we got to research, and then we got to figure out, what the value of the company is, first of all. Then you got to stay for the long term. And lastly, You got to look at what's projected to come out or coming to solve that need that as human beings, in this whatever world we're living in, looks like we're going to need. So if we figure those out, then you have a great opportunity to say, oh, this company looks like it's going to do good. Let's take on and invest in this company for the long term.
Exactly.
Damn. Okay.
And then, so once you have that mindset,
Mm-hmm.
it changes the way. It changes your psyche, because what ends up happening is, so I have a lot of friends that still like to they day trade.
Okay.
So what ends up happening is, if my friend buys a stock at $20 and it drops to 10, the whole time it's dropping, he's like, shoot. It's like, he's upset, damn it, it's dropping, like panicking. Do I sell? Do I wait? Do I sell?
Yeah, shit.
And it's just very high stress situation.
Fuck. Yes.
Right. But when you buy a company, so let's say you bought it at $20,
mm-hmm.
and you bought that company because you believe not in what they're doing next month, it's what they're doing over the next 5 years or over the next year or two. So if the stock price drops temporarily, that's actually a good thing, because now you're in a position where you could actually buy more of the company. And if you bought it at $20,
mm-hmm.
you should still be wanting to buy it at $10.
Correct.
And once you shift out of the day trading, mentality, just buying because someone's going to buy it at a higher price.
Right.
Once you shift out of that, when the companies that you own start to lower in value, if you're in a position where you could buy a little bit more, mm-hmm. you should be thankful
that it
because
got a chance to.
Exactly.
Okay.
And if not, the people that just day trade, while it's going down, they're panicking, they're selling, they end up, they'll lose money.
Yeah.
Right. A lot of people have it where if it drops 5%, they'll just cut their losses and sell automatically.
Fuck.
And it's crazy because companies the market's not rational, right? So you could have, like Apple, they just released a quarter and they had for the first time $100 billion of revenue in one quarter,
mm-hmm.
which was just a big deal. Everything was up.
Yep.
And the stock still dropped by about 10%.
Yeah.
Like the stock doesn't have to be
follow.
rational.
Yeah.
But going back to what we talked about, I expect in 5 years for Apple to be valued at a lot more than it is today.
Damn. Okay. So let's buy Apple, guys. Come on.
Well, that's one of them.
Yep. Okay.
I mean, and it just depends. I'm just using it as an example.
No, and I understand. And what you're trying to do is it goes back to like what we've talked about, is you research what's coming, right? And also stay away. My opinion for the average Joe, and this is important. Stay away from the fucking day trading as much as you can, because it's completely it's a panic attack, and there's too many of us now in there that we fuck around and we create these problems for big companies. But if you're in it to win it, then you have to wait, Okay. So, ahora, talking about specific stocks that you feel have a good, position in the market starting up that people can relate to, like right now, like GameStop is a mess. But the ones that you've researched and you think, okay, look at this company, it's coming up. Let's recommend 2 of them. That makes sense because you have, looked at them and think these are good.
Okay, so there's one company that just recently came out last week on Friday, so about 7 days ago, and it's called Hims and Hers. So they just did the reverse merger, so it's trading publicly.
Okay.
And what I really liked about that company was that, so one, its market cap was really low. It was only at $1.5 billion, $1.5 billion. So it was a low market cap. Okay. So you're still getting in very early. I mean, it just IPO'd, so that's kind of like the baseline. But I had been following it for a while, and what they're trying to do is, going back to the healthcare industry, mm-hmm. they're trying to appeal especially to millennials with certain things. They have something for like erectile dysfunction, for hair loss, for acne, and there's a couple other things where you would normally have to go get an appointment, sit in the waiting room, wait to be seen by a physician, get your prescription, go get it.
Right.
What they do is they connect you with the physician, so it's all done online. You do like the video conferencing and everything. They'll give you a prescription. So this company's been around for a while, for a few years now, but even right now, they just released their third quarter, and they had almost 100% growth year over year.
Okay.
Which means that their base doubled year over year.
Right.
And they're projecting that kind of growth.
So it's a small company, not necessarily small because hasn't been around. It's small in terms of their capital, what you call it?
Their market cap.
Market cap.
Mm-hmm.
So it's worth looking at right now.
Yeah.
Okay.
So
cool.
so for example, I came across, so when I had been following it for a while, I came across an article where it was talking about that, how it had almost 100% year over year growth, which is great because it basically doubled its user base. And it's expecting to continue to do that kind of growth.
Nice.
Right. So it goes back to the same thing. If it's valued at 1.5 billion with 200,000 users,
Mm-hmm.
well, what happens when it gets 1 million users?
Right.
It should be valued at much more than that 1.5 billion.
Okay.
Right. So that kind of gets you started to do more research.
Oh, I see. That's a good one.
Okay. So when they completed the reverse merger, they were able to get $280 million of additional funding to help grow their company.
Okay.
So the CEO already said that they only use about $7 million to run their company on an annual basis.
Okay.
So that gives them a very big cushion.
Yeah.
They could take that cushion. They have a lot of money. Exactly. They could take that cushion. They could quadruple their advertising budget, their marketing budget.
Yep.
So they could appeal to a broader base in a shorter period, bring in more revenue, accelerate the whole process.
That's really good.
So
those are really good standing positions to be in.
Exactly. Mm-hmm. So, and this is a great example because on Friday, it came out and it was at $15 a share. So I bought some. Mm-hmm. And I always try to buy in chunks. I don't want to, if I'm going to take a position, whatever it is, I don't want to buy all in at once.
All right.
I'll spread out at least a little bit. So I bought in at 15, took a position. Mm-hmm. And then on Monday and Tuesday, it started to drop a little bit.
Yep.
It got down to about $13. It really wasn't making headlines or anything, which is fine because I still believe in the company. Yeah. It's just that
the
market didn't even really know what it is.
Yep.
But it doesn't mean that it's a bad company. What it means is that people still don't know what it is, so it's still a great time to buy. So when it dropped to 13, instead of being upset that I bought at 15, I'm like, well, that's okay. It's at 13 now, so I'll buy more.
Yeah.
So that's exactly what I did.
That's a good mindset.
So I bought more at 13, and I had sent this individual stock to several people.
Yeah.
Like I highlighted the part of the article that talked about their growth, and I sent it out to a few of my friends. So we take a position, it drops. We take a bigger position. After hours, there's what's called ARK Investment. Kathy Woods, she's getting a lot of attention because she was a big fan of Tesla when it wasn't doing well.
Okay.
And Tesla exploded.
Yep.
And because she was such a strong supporter of it, she was basically the only hedge fund company that was out there saying Tesla's not only a good company, it's worth 10 times what it is today.
Nice.
And that's exactly what happened. So she gets a lot of attention right now.
Okay.
So
she was correct.
Yeah, because she was correct. And her other picks have been doing well.
Okay.
So the reason I bring that up is on Wednesday after hours, it came out that her company took a large position in HIMS.
Oh, nice. Okay.
So HIMS after hours shot up about 40%. And then the next day it shot up another 24%.
Oh shit. Okay.
So now it's trading at about $18, $19 a share from 13. So it's up about 50% from then.
Okay.
So that worked out great because she brought attention to it right away. And so now more people are
the influencer.
The influencer, yeah. So now people are buying just because they see that she's buying.
Okay.
But even if she wouldn't have, and I think this is the bigger point, maybe it takes a month, maybe it takes 2 months, maybe it takes 3 months, but eventually, if you have a company on Wall Street, when they do quarterly earnings, and they have to do one every 4 months, when they talk about doubling in size year over year, everyone's ears light up, and it'll draw attention regardless.
Okay.
So even if she wouldn't have,
you still
it could have stayed at $13, and if I was able to continue to grow my position for the next 3 months at 13, 12, 11, whatever, I would have continued to do that.
Okay.
Because I believed in the reason. I mean, I didn't talk to Kathy Woods, but I'm assuming we're kind of on the same page.
Yeah, because you're looking at the actual company's worth and how they're doing. Obviously, there's no. there's no secret to it. It's just how are you guys doing
Exactly.
economically? How are you guys doing in the business? You guys are doing good. You guys projecting 100% gain? Shit. She's looking at the same numbers that you're looking at.
Exactly. And then you study the business model. Okay, millennials don't like to go to the doctor. They would rather just do a FaceTime physician.
They're a digital world.
The digital world. So, okay, you're appealing to them. And then I really think that that particular brand has a sticky factor.
Yep.
Hims. It's simple, clean, right? It'll resonate.
It's a good marketing thing.
It's a good marketing thing. They have Hims and they have hers.
Yep.
And that's it. It's a great marketing thing. So I think that in 5 years, in 10 years, they might be pretty big.
Okay.
And again, so now you hold you know your money's there, and it continues to grow for you.
So that's how you assess the whole thing. Even when you're losing $2, on your initial position, you got a 15, and you're like, "Fuck it, it's 13." Now you're happier that it dropped, and you buy more.
Exactly.
And you're now like, "Oh shit!" If it drops a little bit more, knowing the fact that long term, quarter by quarter, these guys are gonna be fine. And so la agarras a 11, 12, 13, boom. You're still okay with that.
Exactly.
Because you're playing the long-term game, not panicking and trying to sell when it turned to 12 from 15.
Exactly.
But you already know because you have all this research or this background on like this company is going to do well. Like Apple did, like Telsa did, like these market things look good moving forward.
Yeah.
That's pretty cool, man. That's like a mindset altogether because not everybody's thinking that way, especially the Joes that have, Joes of the world like me, that we have, a job and we have a, relationship and we have things happening day to day that we're not, and we're in social fucking media and we're wasting time. To not have that mentality is probably difficult for us because if we lost $10, we're fucking out, we're trying to sell. Okay.
Yeah. So I think that's what it is if you take positions in companies because you feel confident in them,
correct,
then it really changes everything. But the only way to feel confident about what you're investing is to know what you're investing in.
It's your research.
If I ask you, hey, what's the market cap, and you don't even know, then how do you know if the company's too big or too small or whatever? You don't even have a point of reference.
Yeah.
And that's a crazy thing that you don't even have a point of reference.
Okay.
And you're buying into something not even knowing that.
Yeah. No. Yeah.
It's
we're not educated enough.
Yeah.
We're not educated enough in that market. Like we talked at the beginning of the conversation, we are first generation trying to figure this out in the digital world. Millennials trying to make money where older, wealthier families, have been playing this game for years and years and years. And we just got access to it 2 days ago, actually in March, really, technically, because that's when it took off completely for the masses. So we're uneducated. So this is great. This is a good, I think we should be called it a day. I think we're like 2 hours into this.
Are we really?
We're an hour. Yeah.
Wow.
Yeah, it's dope. I'm telling you, it doesn't feel like that, right? Because we're just talking shit. But let's recap it really quick for you. The best practice after research, after market, after you're looking at the company, how much money is a good investment starter for someone who has a 9-to-5? Like, what should you think about starting with into a market, And I'm not saying everything in Apple or in Tesla, but like just let me sit down with my 2,000, 3,000, 10,000. What should I start with? If I'm going to do the research, obviously, and I'm going to be careful with my money. I'm not going to be fucking around. Like, I'm serious about this. What is a good amount to start with so we can finish off the conversation?
So, I mean, that's a tough one because everyone's situation is unique.
Right.
So I don't think how much you start with is important. I think just starting and doing the process the right way is important.
Okay.
Because what I tell people is even if you start with 500, if you're doing the process right, you should, you'll end up with 1,000 or 2,000 or 5.
Got it.
And as long as you're right about the process and the way you invest in a company, because what'll end up happening is, let's say you're starting, you take it serious, you put 500, you're doing the research, you feel confident in what you're buying, and you see that 500 grow to 5,000, and you see and you're like, oh man, I was right about this. I was right about this company.
Correct.
I just turned my 500 into 5,000. Man, if I had 5,000, I would have turned that into 50,000.
Yes.
And that's how it starts.
Okay.
So what you start with isn't really that important.
Damn.
Because if you don't take it seriously, you could start with 10,000, 20,000, your whole life saving. It doesn't matter. But if you do take it seriously, because the market's so big that all you do is you add the zeros to whatever you're investing. Yeah. Right. So if you went from 500 to 5,000, you could have gone from 5,000 to 50,000. You could have gone from 50,000 to 500,000. 500,000 to 5 million. It's just adding the zero. So it's, where do you fall in line? But that growth rate is the same. Okay. Right. 1,000% return is 1,000% return on whatever
process. It doesn't matter what you start with.
Exactly.
It's more of like making sure you understand the steps. And once you understand the steps, it's on $10. Fuck it. Mm-hmm. But if you invest them correctly, the process will give you back.
Yeah, and it'll give you the confidence, because then you'll start to believe in yourself and be like, "Oh man, I
was right.
I was right. I think I do know what I'm doing."
Damn it.
So then so you'll start with that. Yeah. Because then what'll end up happening is, so let's say you invested 500, which turned into 5,000. Mm-hmm. Well, the next time you go out, and let's say you're going out with your friends, and you're gonna spend 500 on a bar tab, or 500 buying new shoes, or 500 buying a new jacket. Mm-hmm. In your head, you're going to be like, man, those 500 could turn into 5,000. So then it becomes, is this shirt, shoes, whatever, is it worth the 5,000? Yes, no. And once you start thinking that way, then it really changes everything. And then things will start to fall in place.
Oh my God.
But that's why I'm starting off with, it's important to not look at investing like gambling, because you won't have any of this conversation if you think you're investing with gambling money.
To lose money.
You have to completely change that. And that's the hardest thing.
Damn, that was badass, bro. Fucking awesome. Okay, cool.